Okay, this is the morning drill down for October 18th, Thursday. Let's take a look. Here are the equities. Let's get to the daily chart. All right, so you can see the reversal that we had on the equities starting back on the 15th. It really kind of started on the 11th, but the carry through we got started on the 15th. We've had 3 bullish days in a row now, and are working on a little doji candle right now. So you see Monday, Tuesday, Wednesday bullish, and then Thursday today not getting the same kind of carry through that we had for the last few days. So wouldn't be out of the question to get a retracement. And like I said yesterday, a retracement wouldn't be a bad thing. It'd give us an area to try to buy on this new uptrend. So I think at this point we're done with this FIBO. We can see the movement that started on September 4th through September 14th. We came down, you kind of oscillated your way back down to the 61.8% FIBO. So from that low to that high, we did a 61.8, a little bit lower. We broke that low in the process. So I'm going to go ahead and ditch this FIBO. I'm also going to go ahead and get rid of that line. So one thing I want to be cautious of is this can turn into, we have lower highs and lower lows. So I want to connect these just in case. And like that way, if it does decide to turn to a downtrend, we're going to be cautious if we get to this line for any bounces. I want to make sure it breaks and stays within this equidistant channel instead of turning into a lower one. I guess we could even see if, okay, so one thing I want to see is if these lower highs were parallel to these lower lows, and they are not. So you see that right there. They are not parallel to each other. Let's go and delete that. So this is what we'll be keeping an eye on. Again, I still expect this to be an uptrend just because look what it's done since June. For the last several months, it's been working its way up. It won't be the first time that maybe we get, you can see here, we're back in July, we had 2 lower highs, and I think these look like lower lows, or maybe they're about even. So we had a low there at 1324, and lows here at 1326. So I guess those weren't lower lows. Either way, we're in an uptrend until at the least we hit that. Let's go ahead and run a FIBO on this move, so that way if there is a retracement, we're keeping an eye on it and can get in long on some sort of bounce off of a FIBO and head back higher. You can see these upward trend lines are starting to kind of converge with the trend line. So I can see the FIBO levels are converging with the trend line. If we can end up at like a 31.8, 50%, wherever, somewhere along this, I think that would be a good level for a bounce, because you'd have some confluence there of 2 different technical levels signaling a potential bounce. But we'll just kind of keep an eye on these and follow the signals that we end up getting. Let's take a look at the 1 hour. And this is what that same movement looks like. I'll go ahead and adjust the FIBO to there and to here. All right. And the FIBO we get could be, you could end up getting it on like these hourly charts. You can see on this movement, I'm going to change these colors to make it stand out a little bit. So on this FIBO, we got a 61.8 So then we'll go ahead and move that low to that high. There's a 38.2. So move that low to this high. There's another 38.2. And in this one, well, let's just say 38.2. Go from that low to this high, a 38.2. That low to this high, 38.2, like almost a 50. We're between the two. And this is the area where we had this gap. So I'm not real sure what to do about this gap. I'll just start from that low and go to the next high. This looks like some sort of spike. I'm not sure what happened here. So we'll go up to that high. And it came down to almost a 61.8, so the retracements are getting a little bigger. And if we go from that low to the most recent high, so far we've done about a 61.8, a little lower. So we did a lot of 38.2s, and then the retracements are getting a little bigger, and you'll generally see that at the beginning of a breakout or the beginning of a trend move, you'll see the retracements be a little shallower because you're having fewer people taking profit. So as fewer people take profit, you get smaller retracements. As the move gets deeper and deeper and deeper, you're getting two things. You're getting more people taking profits, you're getting more sellers at the various levels, and you're also seeing more people lose a little confidence in the trend. As the trend gets older, people are thinking that maybe it's over, maybe it's time for a reversal. So part of what those Fibonacci retracements do is they tell you how much confidence investors have in that trend, and the deeper the retracement, the less, or I guess the smaller amount of confidence investors have in that trend. So since you're seeing it go from 38.2s to 61.8s, it shows that you're getting more sellers at the different retracement levels, and signals potential for a move down. So since this is the hourly chart and the retracements are getting bigger, we did our FIBO on the daily chart. And if we can get enough sellers to take over for a while, maybe on these daily candles, we can go from seeing 3 bullish candles to 1 or 2 bearish candles where it comes down, get some sort of retracement here. Again, if it's 38.2, great. 50 or 61.8, we'll take it. We just want to see a signal that, like, that profit's been taking on a daily basis. Some of those, the swing and position traders are really just swing traders, and then start looking for areas to buy. So that's the plan on the equities. I see right now we're kind of getting just this consolidation, moving in a flat channel, and we'll keep an eye on the movement today. So those are the equities. So let's go ahead and take a look at the Forex. Start with the euro, get to the daily. Alright, and there are some things that didn't get updated from last night, so bear with me here. But so looking at the current candles, we have not broken yesterday's range. We had been in very much a trending market. You could really say since the 10th. And I'll go into that so that when we get to the hourly chart, we can go through the breakdown. But on the 10th, we had the lowest high, and we set a target for there. We're able to break and sustain that the next day. So on the 11th and 12th, we broke and converted and did a FIBO, and we'd got a retracement on the 15th. And so if we look at the 10th and the 15th, I want to see if that coincides with the equities and their reversals. Here's the 10th, where you can see we started to get a bounce off of this trend line. So there's the 10th and the 11th. We got a bounce here. And then there's the 15th, where we got the bounce off of this lower trend line. So 10th and 11th is kind of with the time zone difference, it's possible that this is where that bounce started. Either way, we did find lows here, moved higher, and then ultimately got a bounce that started these 3 bullish candles on the 15th. So back to the euro. We had a target here on the 10th and 11th, moved higher. We set another target here starting on the 15th. We were able to get above that, convert it to a retracement, got higher. So we had a couple entries on each of these levels. Definitely a trend move up. And right now, we were able to break session highs, break and convert session highs the last 1-2 days in a row. And right now we seem to be getting a little bit of retracement or consolidation, just like we're seeing on the equities. So just like we did on the equities, let's go ahead and do a 5-0 on the daily, like a daily basis 5-0. Get that drawn. This will help give us some targets for potential entry going back long. We'll just leave that there. Other things that can help us will be, if this just consolidates, we'll use whatever that. If we get a lower high today, we'll use that, and we'll just keep using the high. Like if the highs continue to be lower, we'll just keep saying targets. Just like we did here with the lower high, just like we did here with the lower high. We'll also be watching these 5-0 levels in conjunction with this trend line and in conjunction with this trend line. So we'll keep an eye on the 2 of those. And just to show where this trend line came from, it's connecting these lows. And then once it was broken, you can see, so it was a low here, we broke it. We used it as resistance for just 1-2 days, and it is strong enough, or was there for long enough to consider it possible that we've converted from support to resistance back to support. So let's go ahead and get to the hourly. So there's that 5-0, and here are some of those entries I was talking about that just flat got missed, where let me move these. But here's the target we set back on the 10th. When we broke and converted it, we eventually ran a 5-0 and then had a potential entry on the 14th, which, going back to the equities, I'm not even sure if the 14th is on here. 12th. So go straight from the 12th to the 15th, because the 14th was Sunday night. So this was around the market open Sunday night. You can see from 7 o'clock to 1 o'clock, all of these areas, so there's potential entry there. Then we had set a lower high. We're able to break and convert that, and then had another opportunity to enter around 9 or 10 o'clock on the 16th. So those are the 2 entries that we had in this uptrend. The uptrend from the high to or from the low to the high. So if you had really been on your game, there was about 300 pips there. And if you just go from where we could have entered to the high, it's about 240 pips there. And just in the last cycle, there was 120 pips. So, a lot of opportunity there. It's unfortunate to have missed these entries. So we'll just look for the next one. But right now, just like on the equities, we're getting this consolidation where so far we have lower lows and lower highs. So we did that 5-0 on the daily basis. We could look at some 5-0s here in the hourly charts. Like, we could go from this low to this high. I'm going to have to use a third color on this. Let's just go with I don't know, it's red color. And I probably won't keep this because I want to stick with the daily chart, but So you can see we've done something between a 38 and a 50% FIBO here already. So if it bounces long, there's potential that this could have been the FIBO. All right, so if this level came in at 3076. We've been as low now as 3081. That's at 5 pips. $3081. I'm trying to see what this FIBO level is. 3091. So we were 10 pips below that. So like I said, I'm going to remove this FIBO because if that was the bounce, it already happened. Well, I'll go ahead and leave it, and if it does go lower, we'll keep an eye on it. I guess there is some confluence here at the 38.2, matches the 76.4. Maybe that'll be worth something. I don't know. I'm not going to get my hopes up. We're kind of should really be sticking to the daily, and again, you can kind of see some confluence here around the between the 38 and the 50. We have this trend line coming in. There's potential that these moving averages will be working their way up by then, so we'll keep a lookout there. Just go back to the daily. Okay, so we're way above the moving averages. Those are out of play. Back to the 1 hour. All right, let's just stick with these FIBOs. If we break this high, we knew that this was the retracement potential for entry. If we keep moving lower, we'll use this pink FIBO for the daily chart and see what we end up with. But I think all in all, again, the trend is still long for now. We're still buyers on, we still want to buy dips right now. And the phase that we're in right now is just trying to identify where that dip's going to be and where we want to try to buy. There's just this cycle in the last 24 hours, the last day's cycle for looking for a retracement, or there's using kind of this longer term movement, the last movement we got on the daily chart, and try and get an entry on that. And one thing to point out is so we had one, well, so if we go from the low on the 10th to the high on the 12th, so you can see that's, I guess we just go, the 11th is in there. So that's a couple days worth of movement, the 10th, 11th, and 12th. We got a retracement. We hit the 61.8. So right there, so there's even more confluence. We had the 61.8. I guess that's what got us in the first place, because we broke and converted this target level, and then this is where we got the retracement. So 61.8, that's what got us going long. And it was over the course of 3 days, from the 10th to the 11th and the 12th. This FIBO would take us from the 14th through the 17th, so 3 days. 14th, 15th, 16th, 17th, so I should say 4 days. Maybe it could come down to the 50 or 61.8 again. Either way, that's just pointing out that it wouldn't be the first time that we get a FIBO on a daily chart or a daily basis, and so there's nothing wrong with looking for targets there. Let's go to the yen. All right, in this case, we did have the FIBO drawn on a daily basis. We didn't get down to 38.2. Looks like we potentially bounced off of the moving average and started heading higher. But let's get out to the daily and take a look there. So again, let me get this off, update these. All right, and just like the euro, we had a couple targets on this pair on the 10th and the 12th. This one was a little bit choppier getting through the targets, especially around the 11th. So there may have been some stop outs in this area. We'll take a look once we get to the 1 hour, but eventually we did break out and sustain this uptrend. And so that's the movement we want to be in. Once we get to the hourly, you can see some of the entries that were there. We've definitely been moving higher today. So whereas the euro and the equities are just kind of consolidating, the dollar yen has really gone long. I bet when we get to the hourly chart, we'll see that we've converted this high. So at that point, we'll just want to run a 5-0 of the move that broke and converted that, and that will become our target for entry. So we'll keep an eye on that level. We're still below this 200-day moving average that came in at 79.38. So if we get that high, that's something we'll want to be aware of, or just kind of know that is lurking. Right now, we don't seem to be very far from it. We're at 79.23, so we're only 16 pips away from it. If anything, that could be where we get to begin the retracement, because you see this movement's getting to be a little overextended. We've moved quite a bit higher, broke several highs. We broke this high, and let's go ahead and get that one drawn. So we had targets there. I don't think, well, let's just go ahead and draw it. So broke that high, broke this high. Now we have this high in our sights. Okay, so between the break of 79.20, which, I mean, we're only 2 pips above right now, and the high for the session is only 79.26, so it's not likely that we've converted that area. If we're headed back down already, potentially getting a bounce off of this area to head lower. And if it's not there, then, like I said, we're 17 pips away from this 200-day moving average. That could be where we end up getting the bounce. So let's just do some fibs here to see from there to there. Make that bigger. And this will help us start setting some targets for the next buy. Let's get into, so there were some lows. I think it was on the hourly chart. They were connecting here. If those were hourly lows, we might not need this trend line anymore. Another trend line. This just seems like such a steep angle to connect these lows, but actually it works. So we'll use that. We'll see how it looks once we get to the 1 hour chart. Because you can see there's low there, and then we actually used it as low here. Can't really see what the low was, 78.60, so there's the low. So I don't know, we'll see once we get to the hourly chart. But again, still an uptrend. Zoom out. This is the daily chart, so you can see some of these areas that we're trading against. Broke above that trend line. So that's the big picture. And you can see that we had been making lower highs along with these lower lows. So boom, 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 formed a trend line, broke above it. So it seemed to be in an uptrend in that regard and buying dips. So we connected these lows. It just seems like a really steep trend line that we have traded below. So what if we connect those lows instead? We'll go with that. So there's that trend line that we use connecting these lows. I think we're probably done with that for now. So connecting these lows, that's the trend line. If that ends up intersecting with, looks like even this might be a little steep to intersect with 38.2, since it pretty much have to do it within the next hour to meet there. You can see it is running pretty parallel with the 100-hour moving average, but the trade's extended so far that even it's kind of out of play right now. We'll leave the trend line there just because it does connect these lows, the most recent lows on a daily basis, and see if it bounces. Otherwise, we also have this FIBO drawn as well. The first target I'm looking at, since they kind of since there's a convergence here, is last week's high, 78.75, matches the 38.2, 78.75. That's my first target for a buy. If we can get a retracement down there, I think I'm definitely a buyer at 78.75 if we can get there. The 50% FIBO is also in line with these previous lows, yesterday's session lows, where you can see 78.60. One, it's the 50% retracement. We've also hit it on the 15th. We hit it on the 16th, and we hit it on the 17th, just within a couple hours of each other. So this could be another potential area for a buy. Definitely somewhere between 38.2 and the 50 is where I have my buy goggles on, and would start looking for strength in the dollar to take this pair back long. Something to use is kind of a trigger on that would be the dollar index over here. You can see we've been getting some dollar strength on there. The dollar has been stronger on here since the 17th, the last few hours, and then just kind of consolidating. I guess that's so. Here's some of that dollar strength. When did it start here? About 11 o'clock yesterday. So let's take a look at 11 o'clock yesterday, right here. So you can see kind of consolidation. 11 o'clock rolls around, and then you really start to see things take off here. It's not the relationship here. The correlation hasn't been perfect recently, so we'll have to figure out what's going on there. But I know with that Japanese company buying Sprint, there was a big spike, big demand for dollars over yen, which I think was possibly a catalyst for the beginning of this uptrend. And well, for whatever reason, or thankfully, it's sustained. So the uptrend seems to be in place until we can start breaking some of these lows. Target for the next buy somewhere between this 38 and 50 range. You can see, it's 15 pips between 78.75 and 78.60, and just depending on where you can get in, we could use the 76.4, or I'm sorry, the 61.8% retracement as the stop. That's not too bad of a stop, but no, we'll just kind of take it as it comes, and again use that dollar index to kind of indicate when you might start seeing some dollar strength over the yen. Let's go to the Aussie. Going out to the daily chart, you can see the big spike yesterday. It was called a one-way street yesterday. I'll get that FIBO off. We have already broken yesterday's high. We'll have to take a look to see if we've converted it. I'll go back into some of the levels some of the entries that I missed on this pair as well. And so just like some of the other, the target on this pair started on the 8th, and kind of like the yen, it was a little choppy too. So we got chopped out on the 9th. It's still a little rough going on the 10th, but by the 11th, we were above it and working our way higher. You can see on the 12th, we actually got pretty close to just a perfect test of it and bouncing off of it. So you can see the target was at 0218, and the low for this day was at 0215. So just 3 pips. We did end up going a little lower, and I think if we run a FIBO, you'll see that from, where was the low? From here to here, look, we hit the 61.8. The 61.8 FIBO came at 0203, and the low of this session came in at 0201, so 2 pips away. That was a potential entry. And so using that lower high, we set another target, and remove that, do a FIBO from here to here, and we'll see if there's another entry in this area, kind of at the 38.2 just below. I'll leave that. Oh, oops. So I'll leave that there. That way when we go into the hourly chart, we can see if there was an entry there. Since then, broken converted that high, there's probably an entry in there, and we've headed higher. You know, the target today would have been yesterday's high. We're above it. We'll see if it converted, and we'll also update these trend lines. So the mode is we're definitely buyers. Let's get some highs drawn here since they have become new targets. There we go. And take a look at the bigger picture. You can see we had a little bit of a double top here. We had a high at 0612 and another high at 0623. So they're, I think, 11 pips away from each other. We came back and we made these three lows. So we had a low at 0172, 0163, and 0148. So there were 9 pips and then 11 pips away from each other. These highs within 11 pips of each other, these lows within 11 pips of each other, basically staying within a range. And now we're closer to the bottom, heading our way back up. That's why some of these highs are definitely targets for bounces, but ultimately we really could get back to as high as this 0623 area, if not this 016 area. It isn't completely out of the question. Since we're basically at 014 right now, that would be about 200 pips away. If we can get a retracement from the levels that we're at right now and get in at like a, if we're at 014 right now, maybe at 013, something like that. You can see last week's high was kind of at basically around that 013 area. If we could get a retracement down to something like that, get at 013, there's closer to 300 pips before we start getting those targets. But you see the range that we're in and the reason that we're buyers right now. So we're buying dips until we can get to some of these levels. Let's get out to the daily chart. So I left that FIBO to see if there were any potential entries on dips here, and there was. So if we started that low, you see as we're working our way up, this would have been the first high, and then look right there at the 38.2, came in just 4 pips lower than our target. Our target was 0258, the 38.2 came in 0254, and we got a bounce. We hit the high and came down and bounced off of the 100-hour moving average, and the low on this was still we got 0250 was just 4 pips below 38.2, so you have potential entries there and there. If you entered on this one and you use like a 50% FIBO or even the 61.8, so let's say you entered at 0260, it was somewhere around this target, and you used the 50% FIBO as your stop. So if you wanted to give yourself a few pips below that, 0240, that's a 20 pip stop. Not too bad. There would have been a kind of a sweating period here. You would have ended up below zero for briefly, maybe 2 hours tops, and then that's where you got the bounce. So it was just barely below this 38.2% FIBO, and you've gone long since. So let's go ahead and get some little circles here. So that was a potential entry. Unfortunately, we missed it. There you go. So that was the reason I left the FIBO here. You can see that it did work, and even if we stretch to this high, by the time we made that high, I guess we were still just 4 pips below the 38.2, so it didn't move it a whole lot. Since making that low, we follow the pair through the high that it made. Then it converted it. You keep following it. So You didn't get down to 38.2 there, so you just keep following it higher. We didn't get to 38.2 there. Let's just see from that low. Nope, still nothing from that low. Nothing. So, kind of like I said earlier, when these breakouts are young and the trends are young, sometimes the FIBOs are shallower. You know, you're seeing more people staying in the trend. You're seeing more confidence in the trend, so you're not getting the same FIBOs. If we go to this target, which was the target we set from the high on the 8th, and remember I said it was real choppy. The process kind of works the same. So I'm going to zoom into some of these candles. So this was the low. So this is the low that started the movement that broke and converted that target. You can see it retraced all the way down. So there probably would have been a stop out here. If you had entered on like the 50% FIBO, you can see initially we thought it looked like we may have gotten a bounce, especially because we had the 100-hour moving average there. So potential entry, let's just call it 0215. That would have been a 20 pip stop down to the 76.4, and you probably got stopped out. You know, like, so there's probably an entry here and then a stop out. You see we got back above the target level and converted it, but when you run that FIBO, I mean, there's never an entry. So we got back above it. Maybe you had a target here at the 61.8, again in confluence with the 100-hour moving average. Went long for a few pips, and then you got stopped out again. So this is that choppy, frustrating part. Then, all right, so we're looking for the next break. This is the movement that started the following break. We didn't convert it until there. That becomes our high. You had a 38.2, which was gave us confluence at the target itself. We also had the 50% FIBO, which was in confluence with the 100-hour moving average. So if you're aggressive, maybe you got in at this 38.2. Otherwise, you never got the entry. It did make a higher high, so that's where you started to get some legs on the movements, and maybe that's when this thing finally decided to be in the uptrend. So potential entry there. If you got it, great. Otherwise, you kept on waiting. You could have just continued the FIBO higher. You got a 61.8% FIBO, which was, again, in confluence with the 100-hour moving average, and in this case, the target itself. So it looks like the target here was 2176, and or maybe that's 212 here, I guess. Yeah, I think that's a 2. So 0212 was the target, was the FIBO. 0218 was the target itself, so they're within 6 pips of each other, and the moving average in this case was 0214. So at 0218, 0214, and 0212, you had 3 levels of defense. You know, the target itself, the moving average, and the FIBO. So potential entry there. Not looking too bad. In this case, you did break the high, so there's some pips in that movement. Went flat, and then yeah, you got stopped out at this low. This is that just choppy nature of what we got. Target stays the same, and then it was from here that we really started seeing some bounces. So let's do a low movement starting here. That's, you know, we broke the target. This is where we converted it. So let's go from here to here. I'll have to. There's the 61.8 in confluence with the target itself, so another potential entry there. So then you go from that low, we set a high. All right, I think, and this is the stuff that we've already done. So we set a high, we retraced, then you look at the movement that broke and converted that high. You know, this is kind of a small movement to be doing a FIBO on. and it's just a couple hours. So it's down to 76.4. Not necessarily the kind of thing you want to do a 5 on, but you can do from this bounce or from this one, which we've already done. So that came in at 38.2. So there you go. That's kind of the lifespan of this movement on the Aussie. That's why some entries early on in this trend got stopped out, unfortunately. Why some of the pips in this uptrend were hard to get. You know, I think the uptrend started here, and I wonder if we could just go from here all the way up to here. So right there, 61.8. I guess we can go ahead and draw another circle there for a buy on that 61.8 on the daily basis. So that's why we run these 5-0s on both the hourly and the daily basis, because that 5-0 went from the October 8th high, the October 8th low to the October 11th high. So that was over the course of a couple days. Let's zoom in here. So there's the October 8th low to the October 11th high. Go back to the 1 hour, 10 days. So again, there's that 61.8. So you can see where those levels came from. Now that we've been in this uptrend, again, we broke and converted yesterday's high. If we run a 5-0, it would be from this low, because that's where the movement started, to whatever the high ends up being. There hasn't been the same kind of range we've been getting on some of these other highs. So don't be surprised if this breaks through. Even though the 50% of this 5-0 comes in almost exactly at yesterday's high, I'm not convinced that I'd enter along here, that I'd buy. Just because you can see on the daily chart on the equities right now we're looking at a bearish candle. You know, we're lower than the open. You can see it's kind of been this consolidation. We're working our way lower. As long as these equities look like they're going to consolidate or go lower, that it's going to make it tough on the Aussie or even the risk assets in general to go higher. Especially with the dollar yen going long the way it has. That's giving the dollar some strength. That when we get to the Aussie yen, you'll see that it's probably also broken yesterday's session highs, just like the Aussie dollar. Yeah, so it's broken above those highs and working its way up. And I think if the high even comes in there, we're working our way higher. So just kind of comparing the two again. If the equities do consolidate or go short today, that's going to give strength to either the dollar or the yen. In this case, it's probably looking like the dollar. It could go either way. Either way, the risk assets like the Aussie are going to have a hard time continuing to go long, so this pair could go lower. We could even break this low and get more a 5-0 on more of like a daily basis. So let's go out here and look where this move started there. And that's where I'm going to run my 5-0 from. So I want to run my 5-0 from here to here. And that's where I'm going to start looking for entries on retracements. Right now, the 200-day moving average comes at 0342, and the 38.250 comes in at 0330. So they're within 12 pips of each other. That's not too bad. It's something you could use as a target. Let's change this to pink just to keep an eye on it. But yeah, so this 0330 area wouldn't be too bad to start looking for buys. It could end up meeting with this trend line, connecting these two lows, depending on how long it takes to get down there. So you could end up with some potential confluence there. And you can see we're kind of, this trend line is running parallel enough to the 100-hour moving average. So there's a chance that by the time this thing works its way down, we could have the 38.2, the trend line, and this 100-hour moving average all meeting up with each other. and converging on each other. We'll also keep track of the daily highs, working our way down, and start using those levels. Again, we're buyers on this pair. Just it's a little overextended right now to start looking for a new entry. We want to get at least a consolidation for a couple days, maybe even a retracement, but this pair needs to take a break before you start going long again, especially if the equities are going to go flat to down, flat to short. Here's the Kiwi, and after the Kiwi, I might just have to kind of hurry through the Aussie yen and the Kiwi yen for the sake of time, but let's look at the daily chart. So this guy, we'll take a look. So remember on the Aussie, on the daily chart, we had those two highs that were within about 11 pips of each other, and the three lows that were within, I think, 9 pips of each other, then 11 pips of each other. Let's just go to the daily, and we'll look at those. So the highs came in at August 9th and September 14th. So look at, here's August 9th, and here's September 14th. So you can see by August 9th, this had already started coming off of its highs, and in this case, August 14th, it made its high there. The lows are kind of a different story. So you can see we had lows at July 25th and September 6th. Here's July 25th. There's September 6th. And we had another low at October 5th, which October 5th, that low. So where the Aussie was kind of making this parallel channel, the Kiwi had been making this ascending channel. It had been more of an uptrend until the 5th, when the Aussie started going long on the 5th and forming this uptrend. The Kiwi kept going down in kind of this flat, choppy channel. And once we zoom back in, you can see that there were a lot of days where we would break the previous session high and break the previous session low. Then we would bounce our way back up. We would break the previous session low, but then end up with a bullish candle, and then we'd break that session high, we'd end up with a bearish candle. So you can see just kind of this frustrating range we'd been in. We even had a target to go short using this, the highest low, and that same candle was also the lowest high. So the same candle was the target to go long and the target to go short. If we go ahead and draw that, at least for a time, that was the target to go short until we got even a lower high on the 16th. So let's move these, get that out of there. So let's get that removed. There's the lowest high of the group becomes the target. And I'll even draw another line here that we'll eventually get rid of, but I just want to kind of draw the point. So once we get into the hourly, you'll see how we've just been up and down around this range, and really frustrating if you're looking for entries. That's why the Aussie was giving you a clear picture, especially when you look at the Aussie Kiwi. You can see the trend that it's been in. You can see since it's been in an uptrend, tells you that the Aussie has been stronger. This was why the Kiwi was having such a struggle making those moves to the upside. Let's get into the hourly chart, 10 days. So remember, here's the first target. We were getting above it, converted it. If you try to run a 5-0, though, we broke all the way down. So if you entered on a break and sustainment of that movement, you got stopped out. Then you set this low. We did break it. We converted it. If you ran a 5-0, you may have even convinced yourself into an entry short. Like if we go from here to here, we hit the 76.4. So by the time you hit the 76.4, maybe you're thinking that this isn't going to reverse after all, but we also hit the 50. You see we stalled right around here, the 50, which was also the target. That could have tricked you into selling this pair. If so, you got stopped out. Let's just keep moving. So at this point, we still had a target to go short. Um, we hadn't yet made this high. We hit the target, but we never converted it. So there's never a FIBO to look for a long here. We're staying sellers at this point since we converted this low. We broke and converted here. If you did a FIBO like from the beginning of the movement to where you converted it, let me see. You may have tried to enter here where it stalled at the 38.2. If so, you got stopped out again. So really frustrating stuff. All the while it's working its way lower. You can see these lower highs, these lower lows. Eventually we set that target to go long and we broke it. So let's get our FIBO drawn again. This is where that movement started. So that's where the FIBO would have been. We have not done a 38.2. If you go all the way from the low to like this high, never got a 38.2 there either. If we go from this movement, well, I guess we hadn't broken it at that point. So even though we've broken and converted this high, I think that the uptrend is forming, but we haven't got a retracement. You know, there's never a 38.2 or anything to enter off of. So just like the Aussie, before going long, you want to see some sort of profit taking, basically, or you want to see the pair take some sort of break. If the dollar yen is going to keep going up, or if the dollar yen is an uptrend, you have a strong dollar. If the Aussie Kiwi is going to keep going up and is in an uptrend, you have a weak Kiwi. So if you have a weak Kiwi and a strong dollar, the Kiwi dollar isn't the pair you want to be buying. So even if this has formed an uptrend by breaking that high and converting it, there are better pairs to buy. You could start by buying the Aussie dollar. That pair is going to be stronger because the Aussie is stronger than the Kiwi. Or if you need to hedge, you can get the Kiwi yen. If the dollar yen is going to be going long, that means at least you have the yen weakness on this pair assisting you to the upside. If the yen's going to continue to be weak, that's going to help you, even though the Kiwi is more of like a weak to neutral state. So I think the pairs you would want to trade in order would be more of like looking at the Aussie yen first is a buy, and then the Aussie dollar and the Kiwi yen are up there for like your third and fourth picks, just kind of depending on what's stronger or weaker at the moment or at the time of the trade. And then lastly would be the Kiwi dollar, because when you look at the ratio, the relative strength to weakness, this is the one where you have the middle of the pack. I think that the order you would go in is the Aussie is the strongest, then looking at this, then the Kiwi, then the dollar, then the yen. So you want to try to connect the two ends, and these are right in the middle of the pack, which is why you want to stay away from that. Moving into the Aussie yen, we'll go to the daily chart. We had a target to go long here. It was really choppy, hard to enter, kind of frustrating, probably a lot of stop outs. We eventually set another target with using this lower high. We broke it. It's hard to see if we converted there or not, but we definitely converted on the 16th, stayed above it, and we're in an uptrend again, obviously. Some big movements yesterday, the last few days, and even today, just like the Aussie dollar, we've stayed above those levels and are going longer. So with the equities looking to go short, or at least being in a consolidation, might not be time for new buys yet. You would definitely want to buy on a dip on both this pair and the equities. But you can see that this is the strongest movement of the group so far, because like we just went into with the dollar yen and an uptrend, you have that yen weakness, and with the Aussie Kiwi and an uptrend, you have that Aussie strength. And even if we look at the Euro Aussie, with this having moved it down over the last couple of days, you're seeing the Aussie be stronger than the dollar, or sorry, the Aussie be stronger than the Euro as well. So with the Aussie stronger than the euro, you're really getting some Aussie strength to boost this to the upside. We can redraw our little things here. Well, we'll go ahead and leave that for now so we can look at yesterday's move. Aussie 10 days. So that was yesterday's high. We broke it and converted it. When you run a FIBO, let's zoom in a little bit, like it would be from that low to this high. You see, I think we did a 61.8. There it is, 61.8 on the money. That came in at 10 o'clock that night. There you go. So that would have been the last time we got a retracement to enter off of. Since then, we've been working along. I doubt we got a FIBO if you connect that low to this high. Yeah, it's 938.2, which means we're still looking. So since we're still looking and since this trend's been so strong, I vote we go out to the daily chart. We look at when this last movement started, which was at this low, and run a FIBO from there to there and start looking for FIBOs on the daily chart. Let's go ahead and get these highs drawn because they are targets to the upside. And back to the daily, the hourly chart. So these lows, let's see, let's go ahead and that trend line served us well for what it did. Let's see if we're getting another one. So from there to there, I don't know. That might be a little steep, but we'll see. We'll keep it on there. Knowing that it's so steep and that it's just connecting these lows, we don't have to necessarily consider it for confluence. You can see it's already gone through 38.2, so we missed that. We'd have to break it to get to a 38.2 already. We do have these moving averages catching up, which we could use. You see right around what became the 50, we started making some highs like this one. The 50% FIBO is at 81.22. This high was at 81.18, so they're 4 pips away. This high that we got to was at 81.36, so that's 14 pips higher than what became the FIBO. So anywhere in this range around the 50, you can see that we've stalled before, so maybe we could get down there. We'll just kind of keep we'll keep this FIBO here and see how far we can get and try to use this to find a target to go long. I'm out of time. I have to go take care of some things. I didn't get a chance to go with the Kiwi Yen or the Aussie Kiwi or the Euro Aussie, but we did peak briefly at the uptrend here because of the yen weakness. But if the Kiwi's weaker than the Aussie, that's the pair you want to trade first. Aussie Kiwi appears to be in an uptrend, so you're getting Aussie strength over the Kiwi. Euro Aussie's been kind of oscillating. It bounced on the 10th, worked its way higher. We've broken these lows. This is more of a chart used kind of on a day-to-day basis than an inter-day basis. But right now, anyway, you're getting some Aussie strength. So you're seeing the Aussie being stronger than the Euro, which is really helping the Aussie Yen and the Aussie dollar in their uptrends. If we zoom out, kind of gives you a clearer picture that for the longer term, the Euro has been stronger, but again, breaking that low gives us a new possibility to hitting this low or that low. So these become targets, and if we can get to either of them, that just means more Aussie strength. I got to go. Thank you. Bye.